Hello everyone, welcome to this week's Inner Circles Mastermind. Myself, Sean Downey, is taking it this week. So we're going to be going through the major asset classes, also going to be looking at some of the hot stocks and a little bit on sectors as well. So we'll start straight away. Make sure everything's switched on. Yes, it is. And we're going to start off with the US stock market. So this is the S&P E-mini. We're going to be looking at daily charts primarily. And we had a fairly momentous week in some ways, in that on Wednesday we had a big down day. Everyone headed for the exit at once. The excuse was to do with Trump and the FBI, although really that story had been about a week old. But suddenly everyone headed for the exits. This is a typical sort of behaviour that we get these days in the modern world. And we fell very sharply, and it did produce that blue square, which is a power play sell. But we're interested in where it is at the end of the week, and then also whether it's breaking any key levels. And the thing that I want you to look at there is this support point here. So that red line is a daily support, and what needed to happen was price needed to close below there, and then we would have said, yes, this is not just a one-day event. Price can extend down, and it could extend down a fair way, because the next nearest support was all the way down at 22.56, so it was about 100 lower. We went below it intraday in the morning before the cash market really opened in the States, and then we've recovered. The other thing that's important here is these black dashes, which are the range relativity weekly levels, and these are our reference points for bullishness or bearishness or neutral, and we didn't close below it. So it was at 23.76, spoke in the middle of the week about how important that level was, and also 23.54. We didn't close below it, and so really it looks like it's a bit of a one-day event. There is some technical damage there, but these blue lines, which are monthly levels, are still way below the market. They actually really need to come to the top of the market in order for us to think that there's a little bit more going on here. This black line is a weekly level, and that has formed a resistance. So there is some negatives out there, but it didn't fulfill them by breaking down fully by the end of the week. If we go into the Dow, it's a slightly different story. And what I want to highlight here is the fact that a monthly level, which is from way back in 2016, has moved to the top of the trend. Now this is a predictive line, and so it's got to wait to the end of the month before it's actually confirmed. But we already know that unless we make new highs, so unless we take out the March 1st high, it only has to be by one tick, it doesn't have to be on a closing basis, then this level is going to stay there. So momentum or major resistance has moved to the top in a monthly level. So that would be far more negative for the Dow than what it would be for the E-mini and the S&P. Also, we didn't close back above the lower relativity level. So the Dow is far more weak than what the E-mini is. We then go to the NASDAQ, then we get a different story again. And this time we did close back above, so a bit like the E-mini, but no resistances have moved to the top. They're all still below price, and so nothing has come to the top up here. So while we got a one-day correction, until some of these lines move to the top, we don't try and stand in front of the truck. We're not interested in doing that. I then go to the Russell. Russell has been the weakest one of the four. And we've had a variety of sell signals that are actually coming in lower than the previous ones. So we're not trying to pick a top here. We're actually saying that this is what we call divergence as a continuation pattern. And again, we've closed below the relativity level, but we have some very decent support down here. So one was at 13.31. there's a weekly support, and as long as we don't take that low out by the end of the month, we'll also have a monthly support appear as well. So there's a little bit of contrast between the different indexes. Certainly the Nasdaq is the strongest, then we have the S&P, then we have the Dow, and then we have the Russell. Just moving into Europe, this is the DAX, and we mentioned the week before, this square here is a bear cage signal, which showed that the market was overextended. We then tried to attack that high, so a daily level move to the top. It failed there, and then we got a sell on Wednesday along with everything else. We've closed way below the relativity level, and support, so the original breakout point was 12,313. So that's the reference on the downside. It's 300 down, so there is room to fall. The other thing to remember here is we've had this expansion of range on all of these, and so the week after next, it's very likely, as long as we don't make new highs on any of these indexes, that weekly levels will move to the top. So this is the predictive nature of our analysis. We actually know what's going to happen if X, Y, Z occurs. It's exactly the same on the Euro Stoxx. We had a couple of sell signals. It's closed below the relativity, which is negative, but no resistances have moved to the top. So a little bit different to the DAX. Support, which is massive, considerable. It's a long way away, 100 and 200 points nearly. If we came down to here, that would be a level that we'd be expecting to hold. I might just return to the Dow as well, because there's a good example here. And then finally, we'll look at the FTSE. FTSE's actually been the strongest. We did get a bear cage signal, but no resistances have moved to the top. And actually, we closed near the top of the relativity levels for the week. So the FTSE is by far the strongest out of all the indexes. Somewhat surprising, because the pound has been strong. Pound strength is normally FTSE weakness. And also really gold and silver and miners really did underperform considering what the dollar did. Here we have the Australian market. It came down to the relativity support, held it perfectly, had a time continuation buy signal on Friday, but we didn't close above the relativity level. So this has effectively just come down and tested support, and so far has bounced. I'm going to do the Dow future. I like to look at the Dow future as well as the cash. And here's an example where we had a very set of condensed levels. It looked like we could have broken down, and then on the futures we've held that relativity level, but look at the space. 2,500 points. So if we do have a thing where we break down, there is some room for it to fall. Just coming back to the Dow, similar story to the Euro Stoxx. Look at this confluence of support. Now, some of this could move to the top of the trend. It is possible, but it's unlikely that all of them would. And there's a massive bank of support here. It's quite wide, and so if we were to come down to this sort of area, this would where we would be very, very interested in getting long the market and looking at individual stocks that are doing a similar thing. On to currencies. Start off with the dollar index. Now, the dollar index has been hanging in there, but it broke. You can see we had this monthly support, which it had attacked on numerous occasions, came up to a daily level, which was a resistance point. It topped out there, and then we got a time continuation sell, and we broke down on Tuesday, so the day before everything happened in stocks, and we've extended lower. It's closed way below its weekly level, and support is distance. So dollar index has gone. It is no longer bullish. Conversely, not surprisingly, if we look at the euro dollar, then the euro dollar came down and then reversed very sharply, and we have no resistance. Closed way above its weekly level, 116.17. So a long, long way away. So the dollar index has space, and the euro dollar has space. Do the pound. It sort of flirted, trying to break down through the week. We're really at a bit of an inflection point, because this was also, we were above the range relativity annual target. This is what this red dash here, and you can see that we come above it. We've come back down to it, held it as support, and now we're breaking up as we've closed above the weekly bullish point. Again, lots and lots of room. Nothing till 150.20. The Australian dollar. This is also stabilized, has closed above its weekly level, so it's positive. There's still 75.25 above, so there is still some resistance. So you can see the contrast there, the big contrast between the euro and the Australian dollar. If I do the yen, yen has been pretty wild. Many in the professional market think that the yen is leading the stock market. I'm not entirely convinced. Had a big buy signal down here, which was close to its annual target, that red line. We reversed sharply. We got a pops and a time continuation buy at those lows. Extended higher, and then we've got a time continuation at the top, and also we had our stepping process. So this is how we look at the internal trends, and the 240-minute stepping process and the 420-minute ended a couple of days later, telling us that this trend had now exhausted itself. And then we've extended lower. So when stocks fell, people will tend to buy the yen, and so price has broken down again. We have the annual target down here around 108, but from the point of view of support and resistance, there's nothing much for a long way down. Let's do the Canadian dollar. I've written some pieces before about how it doesn't correlate with oil as a two-way street. It tends to correlate just one way. And there was a little bit of evidence of some correlation both ways during the week, although it took some time. And we broke up on dollar Canada. Just waiting for it to come up. And then we've had a reversal on Thursday, I think it was, possibly on Wednesday. There we go. So we had a UFO at the top. We had a stepping process on 120 end. And then, having held the breakout point, we decisively broke it on Friday. So again, more dollar weakness showing up across the board. Going to precious. We were particularly positive of silver the week before because it had reached an extreme, and so there had been some buy signals occur. Starting off with gold, we had simply a stepping process end, a 240 and a 420, but no buy signals as such. We've closed way above the weekly pivot. We've also taken out the weekly level of resistance. But overall, considering how far the dollar has fallen, if you think about how far the dollar fell on Friday, gold still hasn't even taken out the high from Thursday. So it is generally underperforming. Having said that, our target looks like 12.97. Green square there, power play buy. You can see there's been a few in the past. This one here when it was close to a low. This is silver, and we came down to a daily support. We held it to the tick, this red line here. We'd had a bullwhip buy a little bit ahead of that. Stepping process ends, tells us that this previous downtrend has now exhausted itself, and we've reversed back up. And during the week, I talked about 1688 as being the critical level. If we closed above 1688, then it would open up 1733, and then we'll see how we go after that. It hasn't managed to do it. So in spite of everything going on and the dollar weakness, precious really hasn't got the benefit that it could have done. So while it has gone up for us, it hasn't gone up as much as it could have done if it really wanted to. To do copper, it's not one we look at a great deal, but that has also had a reversal. So just see how it's come through. It's been in a downtrend for quite a while, and then on Friday we closed above the high pivot point, and that's opened up some space to 269 from its current price of around 258. So a few things are just saying that yes, copper is positive. If you were looking at a copper exposure stock, Antofagasta, based in the UK, is probably the best one. Code is ANTO. We talked about that a few weeks ago in the inner circle, because we'd had a sell signal at resistance, at the weekly resistance, so that's perfect sell signal really for us. Where was its target? Well, its first target was the other weekly level, the other side at 748. We came down to it a couple of weeks ago. Didn't get any buy signals there, but it would have been a profit-taking point. And then since then, it's sort of mirrored copper to a certain extent, and that has also closed just above its weekly level. So the stock that tracks copper is also positive. Sugar has been one of our big ones. Again, a bit like silver, it had reached a very overextended trend level. And if I just put on range relativity. So what had happened was the monthly level was below the yearly and the semi-annual, which are these red and brown, and also then weekly was below the monthly. So this is when we know that we're at an extension area. So that what we're looking for is a bottom process to occur. The first thing is the 240 and the 120-minute steps tell us that this downtrend has exhausted itself. We have that the buy back above the weekly high pivot point, and after a pretty wild week, it was up and down like a yo-yo. It's extended higher, so that's a position that we remain long of. Now, there was also, just to highlight what can happen with stocks, and that we don't just show you all the good things, CZZ, so Brazilian sugar exposure, and if people wanted to get involved in sugar from a stock exposure, then they could have been buying the stock. Now, it suddenly collapsed on Thursday. Had to look around for a story. It was actually to do with the Brazilian president being impeached. So the whole Brazilian stock market went down. So nothing to do with sugar per se. So it got a one-day price shock, and then on Friday it reversed sharply, and we've had a bullwhip and a power play. And it just about held a daily support. So with sugar bullish, we still expect this stock to recover, but it has got some work to do. Just an example of how stocks are more susceptible to price shocks. It's very easy to know where you're wrong, though. If we close below 669, then we'll be out of that position, but at the moment, hanging in there. Another commodity that's really got my interest particularly, it's a bit of been trading this for decades, is corn. A little bit of fundamental information. There's plenty of corn around. The crop has gone in okay. The weather is reasonable, maybe a little bit wet. And as you can see, corn has been doing pretty much nothing the whole year. And that's what interests me. There's an old cliche out there, never sell a quiet market. And it's a cliche because it's true. A couple of other backdrops there is the funds managed money is heavily short this market when it's at historically low levels anyway. It doesn't really make a lot of sense. So they can get caught on the wrong side, so we can get fuel from short covering. And then also, the crop has only really just gone in, so there's no weather premium there. If there is any sort of problems through the summer and yields are down, then the ending of stocks September, or the perception in September, October, and December would be that they wouldn't be as high as what everyone thinks they're going to be now. The other thing that really interests me is that the yearly range so far in December corn is only 25 cents, and the average over the last 10 years is $1, and it has been as high as $5. I mean, it's so the lowest has been $1, and we're only at 25 cents, and we're halfway through the year, near as damn it. So it'd be very unusual if we think about that 25-cent high. It's all the way up at $3.97. It's still 15 to 20 above where we are now. We're much nearer the lower end of the range than the upper end. So the risk reward in terms of the upside seems considerable. 384 is the thing that you're interested in, then 405, and then 440. A few ways that you can play this. You can actually just get long the futures, you can buy options on futures, or there is an ETF, which is thankfully easy to remember, called corn. Mirrors the price of corn. As you can see, it's pretty much exactly the same chart, but we're getting buy signals. It's not doing a great deal at the moment. The thing that's interesting is that if I was to scroll back, is to see where it was when corn was back at $5. So it'd be about a 100-point rally towards where we are. And when corn was at $5, this was up around 31, 32. Now the options, I go to Yahoo, it's going to come up for me. Show you another way that you can get involved in this. And there are options on this ETF. So you can do November options, so that will take you through the whole crop cycle, and we're currently trading at 19. And a November 20 call will cost you $1. So it's 100 shares per contract, so it's going to cost you $100 a time. That's your complete risk. If it doesn't work and corn has a great crop and it drifts lower, then that's what you'd lose. You'd lose $100 per contract. But I know that if we get to $485, then this is likely to start trading in the high 20s to low 30s. So your upside is probably $10 for a risk of around 1. So I don't like saying the word risk reward, because we don't know what our reward's going to be. We know what the risk is, and we at least have some idea about where this ETF would go if corn went up towards $5. Let's bring this back. We go on to crude oil. Crude oil has been our #1 pick of the year in terms of the yearly report written back in January. And what this said was that if it could take out the monthly level, which it's approached a few times already this year, then it would open up a huge amount of upside. We've been there a few times, and the funds were very long in this area here. Wasn't really enough momentum. We collapsed back down. We attacked the monthly level, and then we got a pops and a time continuation buy. There was a spike lower there. Happened at 4 o'clock in the morning. Steps has ended, then a power play buy, and then we've closed way above the weekly level. So this has opened up 54.5. Now it could well be that crude is simply rotating, so it could just come back up to 54, or maybe even up to 57 or 58, and then turn back down again. But as far as we're concerned, there's a good chance that it's put in its yearly low. We're nearly halfway through. And that 58 level is the key thing if we extend further over the coming weeks. Done some reports on the stocks that interest us, and HP is one of these. Wrote about it back in here somewhere, and the key monthly support was down at 56.19. So it's drifted lower with oil. We had a bullwhip and a time continuation, but not at support. We've drifted lower again. We came right down to it beautifully, and then yesterday we've had a power play buy. Perfect case scenario would have just taken that weekly high out, and then we really could be off to the races. But with the positivity in oil generally, any pullback in oil, which will obviously cause a pullback here, still very interested in getting long this stock. So definitely on our hit list. Talk about extremes. Actually, I'll move on to extremes in a moment. This is Marathon Oil, which is another one that was on our watch list. This hasn't come down to its major support, but it has formed some weekly levels. It's pretty quiet. I think HP is a little bit more interesting. Now, when we're looking for extremes, we've got FTR. So we have a and things that we're watching for markets that get overextended and then reverse. And FTR is one that's been on our radar screens for some time. Massive short interest in it. It's been having a pretty terrible time. It's in telecoms, way below its yearly level, way below its monthly level, way below its quarterly level, down, 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 and then this week closed way above its weekly level and created a power play buy. So in terms of our buy signals, this is our number one in terms of what's looking at extremes. If I was to do the converse of it, one that we've been monitoring, and this is Carnival, cruise ships. Price of oil goes up. I'm assuming that's not too good for super yachts. And we had a similar situation whereby it was way above its yearly target. The monthly is above the quarterly, so the blue is above the pink, and then the weekly goes above the monthly, and we've rolled back over. So that's an example of a converse signal. It wasn't something that we actually took action on, though. Just going to look at FANG. See, a lot of people was interested in that, so it's worth us having a quick look. This is start off with Facebook. Been on a rip, yep. Worth 50% more than what it was at the beginning of the year. We had a stepping process, 120, a UFO, and a time continuation, but not really created. It wasn't at a resistance point, so it's just a warning sign. And then on Thursday, we've had a power play buy, but it closed below the weekly level. So as far as I'm concerned, it's probably negative to sideways. There is no resistance though, but it's one to start watching. This is really the first the thing to note here. If you look through these low points each week, yep, these low black dashes, this is the first time we've been below it all year. So certainly nowhere near as bullish as what it used to be. Amazon had some stories this week about, I don't know, they sell everything anyway, but now they're going to sell drugs as well. So they're trying to get in the pharmaceutical business. The contrast here is pretty stark. You know, just up, 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 up. It's never gone below the weekly level. Has no resistance. There is some support below. So 923 is a weekly level on a breakout. Netflix. Again, you know, up 60% in no time really. We closed below the weekly level. On a range relativity basis, on the higher numbers, we won't get a yearly one because it hasn't been trading long enough. But the quarterly is above the semi-annual, but note how the monthly is not above the quarterly, so it's not overextended. It's very easy to look at a chart and just think, wow, it must be overextended. And you have to put the studies on and then realize, oh, well, no, actually it's not. You know? It did close below its weekly level. There's no major support until 148.29. I'm just going to go back to Amazon on that. I'm not sure how much data. I don't think we'll have a yearly one. So So this is a bit more overextended in that the monthly and the weekly are above the quarterly. Yeah. So you can see that difference there. Finally, Google. The weekly was not above the monthly, so not as extended as Amazon. We did get a big reversal, but not at resistance, and we haven't closed below the relativity level. And in fact, some daily support has moved up. Go back to Facebook, just for a pattern that people quite often talk about. I'm just going to draw the circle here. Gapped higher, lots of data, gapped lower. You can draw a circle around it. It's called an island reversal. Now on futures, or if you redefine data on foreign exchange, extremely powerful. On stocks can happen far more often. So I did got a few people sending me notes, it's an island reversal, island reversal. I don't really care so much on stocks. What it has done though is come back up and filled the gap. Yep. And then closed below. Yeah. So if I was really aggressive, let's say I really wanted to trade Facebook and I wanted to get short or whatever, pretty easy, because all I'd do is I'd sell it and say, well, actually, I'm going to buy it back if it closes above where it filled the gap. Finally, we're going to look at bonds. So this is Treasury bonds. Buy of the year down here. 2 bullwhips, time continuation, and a pops at the final monthly support, went 1 tick below it. Extended higher, had a stepping process, moved back down, come back down towards a daily support, had a pops, another stepping process on the 420, and then we had a power play buy on Wednesday. So stocks down, bonds up. You have to be a little bit careful with power play buys on futures. They're not as powerful as what they are on stocks. If you think about what the stock market did on Thursday and Friday, though, bonds held up very, very well. So there's a minor resistance at 155.16. The real major level is 157.20. So Treasury bonds doing pretty well. 10-year notes. So we think about that story. Stocks down, bonds up. Stocks went back up. Bonds didn't go down. Tells you there's some inherent strength in bonds. 10-year notes had a Heikin-Ashi support point, buys and an extension, topped out at a daily resistance. That's the key level. Close above there. You can see how that opens up the upside considerably. Europe, which is the German rate. Had a buy at a weekly level, this black line here, had another buy, but couldn't close above the weekly pivot. So nowhere near as strong in Europe. That's really the takeaway there. And if I was to do the UK market, QGA. Hasn't taken out the highs of April, couldn't close above the weekly pivot and actually formed a daily sell. It's a little bit choppy. There's some decent support down here at 127.38. So the UK market is not as strong as the American market as well. Trying to think if there's anything else. I think that's probably it. So for the week ahead, remember there is a little bit of divergence between the different indexes. The Dow and the Russell are the poorest. The S&P and then the Nasdaq being the strongest. In FANG, not all of them have even managed to form resistance based on their own momentum. So going to be watching those weekly levels to see whether they break down. Looking for a pullback in oil if we get one. Some of those oil sticks get very interesting. There's about a dozen on our hit list, which we'll be communicating to in a circle during the week, and obviously keeping a close eye on sugar as well. Okay, I think that's it, and I'll see you all next week.